Okay, so we're looking at a chart of US dollar Japanese yen. Okay, this is the Asian breakout box here. Now, as I said, I've got mine set from 4 hours before London starts until the start of London. But of course, the most important thing is to make sure any currency pair you're trading, that at least one of the markets is open. So if we look at our P4L clock here, Sydney's open, Tokyo's open, China's open. So USD Japanese yen's open. Okay, so this is my broker time is 6:55. Okay, my time down here is 6:57. It's slightly out of sync, but no problem. Just showing you. Here's our EMAs. This is the 200. This is our 77, our 62, our 24, and our 9. Okay, so if I'll just scroll back a little bit here. So this is the last couple hours. So Japan still would have been open. Okay, these are it's been breaking out there. Okay, so this is the pullback. This is our HTT BOP, how to trade binary options profitably, 10-minute indicator. Okay, so it's showing you the pullback there. You don't have to count candles anymore with this indicator that I've had made. Okay, it's really accurate. So as you can see, it's all a little bit up and down, but this is showing you the pullback there. Okay, now what we're looking for is once you see a pullback, okay, because we're always trading in the direction of the trend, then we're looking for 2 consecutive blue candles to indicate a continuation of the trend. So we were watching, you had one, and then, no, you didn't have a next one. Okay. Then, as I said in the description, when you're looking for them, you're looking for them to have reasonable size, so not miniature ones. But just be careful when you have one that's way bigger than the other one. Okay. If I just put my crosshairs on here, see, here would have been a trade here. 1, 2. So you're getting in on there for either a 10 or 35-minute trade. Because that one was so much bigger, I probably would have gone in for the 35-minute trade. Okay, and it worked out. Okay, so if we just move along, and then we've just had another one. So it's been going in an up direction, and then here's the pullback. So as I say, instead of counting candles there, you just watch it below here. It's pulling back, okay. And then here you get a small one and a bigger one, okay. In those cases like that, I've seen many times before, when you get that small one and the bigger one there, okay, the 10 minutes usually come off. But if you didn't like the look of that, because the second one's much bigger, then go 35 minutes, or 30 and 35 minutes. So let's say you got in on this candle, that's 1, 2, 3, 4, 5, 6. So the 30-minute one, but the 35 would have lost. So it's a little bit tricky. But why I always say the 10-minute pullback strategy is because you want to get in and out quick. So most of my trades will be 10 minutes, but as you're learning, stick to the 30, 35. And the reason I say 35 is because if you're on stock pair, for example, you can get a 30-minute exactly trade. Okay, if I just go to stock pair here quick. Look here, if you're... Oh, we've lost it now. If you're in your stock pair, okay, now on USD, you can choose the exact expiry time. So easy to choose a 10-minute or 30-minute, okay? But if you were on, say, 24 options or UK options, you can't choose your exact expiry times like this. So you want to aim for something that's about 30 minutes, but often it might just be a few minutes over, but don't go 40. The alternative is to go completely for the 60 minutes. That is another way to do it, sure. Okay, I mean, like over here, if you saw that, you just went for the hour. Okay, the hour played out nicely, but then you want your EMAs nicely like this, okay? Let's see over here. So if we got in here for the hour, 1, 2, 3, 4, 5, 6, 7, 8. You're still in the trade, so you hope it's going to push up there. Let's have a look at another one. Let's look at New Zealand Japanese yen. The reason I say that, because, okay, you can see there, Sydney's just closed, okay? So New Zealand would be closed, but it would have been open earlier. New Zealand's the first to open. But Tokyo, Japan's still open, okay? All right, let me take these scrolls off here. So you would have been watching your charts. So let's have a look here. I'll put the crosshairs on. Pull back. Okay. 2 over there. And you see I hit the resistance there? This is something I'll still have a look at. Be very careful there. That's why we've got this Fibber pivoting. I don't want to be taking trades like on that one. It closed exactly on the resistance. I don't want to be taking a trade when it's hit the resistance. Okay? So this is a vital point. That's the Fibber pivot you're looking at there. If I just make this smaller, you can see it shows all the different resistance levels and support levels. Okay? You see in there, there's support 1, 2, pivot level, resistance. Those are important lines that you have to bear in mind. Well, we haven't put that in there for fun. Okay? Let's make it a little bit bigger. So on that one, that's a perfect example there. You've got a 2. There's your pullback. There's your 2 candles for your continuation of trend. But look where the second one's ended up. It's ended up right on the resistance. You have to respect that level. Okay, so then we get it. So we wouldn't have taken a trade. You pull back. Okay, now over here, okay, you've got one smaller one and a bigger one. Okay, now it's not hitting any resistance or anything like that. But as I say, when you see a continuation candle like that and one's small and the other one's much bigger, then go 30-35 minutes. Okay, so that ended there. You would have entered here. You see how the 10 would have been a losing trade, the 15 would have won, 20 would have won, 25, 30, 35, 40, even an hour would have won. But you got to be careful that a small breakout there in the blue and then a much bigger one. Okay. A tip to looking at that as well is, this is a perfect example here. When you see the red candles, and we're trading up, so the pullback candles, they're going like that. You see 3, it's big, it's getting smaller, smaller. Then you get your breakout candles, and even though the second one's smaller here, slightly smaller, then it's still perfect for a 10 minute. 15, 20, 25, 30, 35, all winners, an hour. That's a nice, you see the pullback candles like that. You get 3 and they're going smaller, smaller, then you get your blue ones. But over here, like in that example, they was kind of getting bigger and bigger, then you get a small one, and then you get a big one, and then I would never take the 10 minute, because you're going to expect that it's going to pull back within 10 minutes. There it did, it hit the resistance, pulled back, and then it only continued. So those are things to watch out for. So let's say here's another nice example. Put the crosshairs on that. So there's your pullback candles. We're not counting candles on the main chart, we're counting on the 10-minute indicator here. So you get your 3 pullback candles, then you get your 2 breakouts, so then you would enter here on the third one. 10-minute came in, 15, 20, half an hour, whatever, it all came in. Okay, so I hope that makes it easier to understand. Over here you can see, here the volume's dropping off, okay? So that's probably because the Japanese are probably going to lunch now. New Zealand's closed, the volume's going to drop off. That's why I usually like to trade in London hours only, you get much more volume. But during London you'll just maybe have the last hour of Japan. So with these Japanese ones like Aussie Japanese yen and New Zealand Japanese yen, you can trade them, you want to trade them in their peak trading times. Okay, so that's good for the guys that side of the world, or very late at night in the West. Okay, so I hope that's clear. So this is the trend going up, and then we're looking for the pullback, and then the continuation. You want our EMAs nicely spread out like that. Make sure one of the markets open, and over here on our Ichimoku monitor, make sure we've got 13 or more candles. Then before you enter any trades, just look at your news down the bottom right here, and just make sure there's no high impact news coming up while your trade is going to be on. And as I say, I like to say, stick out of trades for at least 30 minutes before they even start, or they're going to expire at least 30 minutes before the start of a high impact news. And once you've had that high impact news, don't trade it for at least an hour. I mean, I often just miss out those trades for at least a couple hours, because the market's still a bit volatile after the news has come out. Okay, I hope that helps.